Welcome back, everyone. I am Cass Piancy, and I'm joined as usual by my partner in crime, Mr. Bennett Tomlin. How are you?
Oh, I'm doing well today. How are you, Cass?
Good, good. It's what an extraordinary few days it's been. Uh, yeah. I let's. Why don't you go ahead and, if anyone doesn't know why we're here and why we're chatting today, can you fill anyone in with what Terra is, what Luna is, and why there's all this fuss?
Sure. Luna is the governance token, the base token for the Terra chain created by Terraform Labs, which is used as like a pseudo collateral for the algorithmic stablecoin Terra. Now, the reason we're talking about both of these tokens today, about this system today, is because we published an episode a few days ago, and over the last several days, we have watched this system collapse. And as of right now, Luna, the governance token, is down from a high of like 115 to $1.07. And Terra, the stable token, is like 27 cents off peg right now.
Yeah, which is actually far up from what it went all the way down to, which I think was 40 cents, something like that. It's been a rough few days for the Terra Foundation, Terraform Labs, and Do Kwon. There's also now seemingly a lot of uh, um, contagion concerns, is what it feels like to me. A lot of people talking about other companies that could be intensely affected by this still possible collapse. We don't know what's going to happen by the end of this. The peg could very well go back to $1. So we're not trying to make a prediction here, but uh, if
Well, I
there
mean, we
is
should
a
probably
collapse.
yeah, we should probably talk about that and what it would look like if it did go back to $1 and whether or not we think that's plausible, right? Um,
Sure.
because that's always the question with stablecoins, right? And when they depeg is this thing once again going to be worth $1? And I think in the case, um, I've been doing several interviews on this over the last several days, and until recently, I thought that it was likely they would be able to bring this back to peg. They had billions of dollars in bitcoins in the reserve. They still had some Luna in reserve that they could sell to try to finance these attempts to return the peg. But things have rapidly deteriorated. Um, the price of Luna collapsing down to $1, like back to almost pre ICO levels, means that Terraform Labs can no longer really use that to help support the Terra price. And if they were to decide to use the Bitcoin, it would hurt the broader crypto market and make it even harder for them to restabilize. And so up until very recently, like even the last few hours or earlier today, I kind of expected that at some point they were going to get this thing back to $1. And watching just the extraordinary crash in Luna over mostly today has made it seem like there is just not enough value here to let them get this back to any kind of functional state.
Well, I do want to say that it seems to be going up rather quickly right now, which we know it did this. It's had a couple collapses now. It basically collapsed, went down to, I want to say something like, yeah, let's see, something like initially something like 60 or something. Then it did a full collapse to 30, popped all the way back up to 54, fell all the way back down to 30. So it's been a bit of a roller coaster, but it has been on a pretty solid uptrend here for a while. It doesn't look like it's impossible for it to go back to parity to me. So, yeah, I mean, if this is to, let's say, in the next day or two, reach $1 again, and they don't have to deploy all of their reserves or sell a bunch of Bitcoin. What do you think that means for the Terra ecosystem?
So if they are able to return it to peg successfully, they end up in this kind of challenging position where they need to find a way to convince people they should once again believe in this entire system, right? They need to convince people that it's worth still participating in this game. And so I imagine what that would end up looking like is them cranking the dial to get the anchor yield up again to try to increase the demand for Terra. It would look like them trying to find someone they could blame or make like the boogeyman for why this occurred and why it's not really Terra's fault. They were the victim of this unjust attack by the system, the banks, the people who just can't stand to see this wonderful success of Terra. And so they'll come up with some kind of narrative like that that will hopefully help convince the true believers that it's worth still being a part of this. And then they'll need to effectively, I think, do more active open market operations immediately around the peg to prevent any minor depegs. Because any minor depeg at this point, if they're able to somehow get it back to peg, would, I expect, result in a pretty quick loss of faith more broadly. And yeah, and once that happens, the system again becomes unrepairable.
Yeah. And so let's talk about some of the contagion fears now, since we've talked about the possibility of it going back and the possibility of them trying to hold it, and that it would be hard. I think they know that, that it would be a difficult process. But let's say they don't, and this does indeed go to zero or stop trading. People are talking about contagion. They're worrying about, it seems like a few companies' names have been mentioned broadly. I think we heard about Jump Crypto, which is a trading firm. We heard about Celsius, which is a lending platform, infamous, we'll say, lending platform that promises very high yields on stablecoins. And I think there was a third name mentioned in that as well, right?
Arca. Arca had their funds still pretty exposed to the Luna and Terra ecosystem throughout most of the collapse. And
couldn't have
so,
happened to a more deserving bunch.
Yeah. And so several companies had unusually large exposures to Terra and are probably suffering. You mentioned Celsius. The Celsius is such a fascinating one. We talked about this way back in episode 20 something when we're talking about crypto lending, is how often their yields are unusual and that they often seem higher than you would expect. And some of the work that's been done on Celsius since then has basically shown them aping customer funds into like random farms and places for yield on chain and stuff. And so I think it is likely that Celsius had some pretty significant exposure to the anchor yield. And this would be supported by the fact that the block reporting suggested that Celsius was one of the firms who was contacted yesterday, back when a bailout of Terra was still considered possible. And so they were one of the firms supposedly in discussions with Terraform Labs to negotiate a new secondary sale and to hopefully help bail it out.
Right. And we have seen a pretty strong collapse in the charts for Celsius Networks Cell Token, which is the platform if you want to get extra yield on your coins when you lend them out on the network. If you choose to get paid in Cell Token, you get, I think, whatever it is, 2, 3, 4 extra percent. So that has ramifications for their platform, obviously. There's also clearly, I think people are starting to come to the understanding that there's a lot of interconnectedness throughout all of this. And so when we talk of this contagion risk, once it starts hitting Celsius, once it starts hitting Jump, once it starts hitting who knows who else, it starts looking like it would be pretty simple for like a cascading problem to occur.
Ju- Jump is one of the really fascinating ones, right? And we talked about this back in the wormhole crypto episode back in the 50s or something, when they had to find like $360 million to bail out Wormhole, which they were invested in. And it was less about bailing out Wormhole specifically, and more about if they had failed to bail out Wormhole, the entire Solana ecosystem was at risk of collapse. And Jump's exposure was pretty broadly across Solana. And I think we started to see kind of a similar thing with Terra here. They were one of the firms brought in the most recent secondary sale to set up the Bitcoin reserve, and they were one of the firms with Jane Street and Celsius, who was apparently in negotiations for this most recent bailout. And I think part of that reason is because they were exposed not just to Anchor, not just to Terra, but throughout that entire ecosystem. And so they thought that making the bet to try to get this thing back to peg would end up worthwhile because their investment was across this entire ecosystem. And I think what it really kind of points out is that many of these traditional finance firms have this idea that they're diversifying their risks by investing across an entire ecosystem like this, buying up all these different products, many of them not particularly good, but with the idea that if we buy all of the Solana projects, some of them have to be successful and then we'll be okay. That doesn't work super well when all of those projects are incredibly correlated and have this exposure to this single risk. In this case, Terra collapsing. And so I hope Jump Crypto is overexposed to Terra, because I would love if Terra ended up taking down Jump Crypto. I would assume they did their risk calculations and kept that under control. But yeah, it's fascinating to watch these traditional finance firms with entire teams of like risk people and traders and stuff end up making many of the same mistakes that traders new to crypto do.
Yeah, and so we've seen a lot of, I guess, a lot of people are talking about how this is the first major stablecoin collapse. To be clear, it hasn't gone to zero yet, and there's been plenty of depeggings of prominent cryptocurrencies in the past, including Tether, which got bailed out by the community. People's memories are short here, but back when, not so long ago, Zhao Dong, who's now in a Chinese prison somewhere, and Arthur Hayes kind of led the march to save Tether, and it worked. It was a successful effort to save a stablecoin that the market had broadly, momentarily lost confidence in. Do you think there's like a difference here? I know you seem, whereas I seem to be on board with the idea that it could very well go back to $1. It seems like you're more of the mindset that there's too much lost here, too much faith lost.
Yeah, and I think the comparison to Tether and the Leo bailout back in 2019 is kind of interesting here, right? Because Tether's use case was that it was this kind of broadly shared token that was meant to connotate liquidity across a whole bunch of different exchanges and stuff like that. And so it was very challenging for certain traders to almost avoid using Tether, because it was the easiest way to move money between these exchanges to make their arbitrage trades. And because of that, there was this very strong incentive for the community to come together and bail it out, because they needed to maintain those type of opportunities. Terra's main use case was collecting the Anchor yield. And so I think that it's plausible that the incentives to save it are less strong than the incentives were to save Tether, because there's already Justin Sun going out and starting out his own brand new super wild yield thing, paying 30% or 40% actually if you do it on Poloniex. And so why even bother trying to save Anchor and Terra, especially if it's going to be like a $10 billion proposition to bail this out, when you can just go fuck around on Justin's shit, you know?
Well, to be fair, they have raised cash from the same people who initially gave them cash, um, and and apparently, as far as what I had seen on Twitter, at least, the rumor mill was saying that they haven't deployed all of their reserves yet. So, I mean, it right. It's at 76 now. I don't know. It seems like there's a very real possibility that this is going right back up to a dollar. Um, I don't think that doesn't suggest that it'll be around forever, or that trust hasn't been lost. I mean, even if it goes all the way back, I presume that the volume and the amount of people interested in using it any longer will continue to decline after an event like this, right?
Yeah, and well, I think it's worth pausing briefly here and like actually going back to how the protocol works and how like the arbitrage mechanism is supposed to work, right? Because when Terra is below peg, what you're supposed to be able to do is go out and buy a Terra for 76 cents, right? Go back to the protocol, do a swap, and get about $1 worth of Luna for it. And so you make that easy arbitrage. However, there's a few issues with this. The first is that it requires the thing you're getting, Luna itself, to be valuable. And as you can see from this beautiful chart here, that is becoming increasingly challenging. And every time someone, so the entire time that Terra is below peg, and the entire time people are trying to make this swap, they are continuing to cause more and more Luna to be minted and effectively sold into the marketplace, further depressing the market cap and value for uh, Terra. And so, because of that, it is, if they get it back to peg, which is plausible, they've got billions of dollars in the reserves. I'm not going to say it's impossible. I think it's temporary because there's just not enough value left in the system for them to really do much with it. I mean, Luna at this point has a market cap below that of BSV, right? Like, it's, that's, look at that chart.
Yeah, someone. I think someone posted. I don't know who. Credit where it's due. I wish I could tell you, but someone posted a chart of BitConnect and a chart of Luna, and they said which one is which. Yeah, there's certainly some Ponzi comparisons that are being made. We'll see what happens. It's still over a dollar, so silver lining for Luna folks out there. Shout out to
There is
Ron,
one thing.
Ron Newer. Hmm? Go
Yeah,
on.
there's one thing I want to add before we move on to the arbitrage mechanism, because throughout the Terra documentation, throughout all of their marketing materials, they use the word always a bunch. Like, you can always trade 1 Terra for $1 worth of Luna, or you can always trade $1 worth of Luna for 1 Terra. And that was just a flat out lie. Like, that was never true. The entire thing was just a virtual automated market making pool, which can very easily become unbalanced when someone moves a large order through it, and then was dependent on like this gradual refilling from minting new Luna into that pool. And so I think a lot of people assumed that like that arbitrage mechanism was just a direct thing in the protocol that you could always use, like they said, to always get the amount they said you could get. But that was just not true. And instead, what happened is like the on chain peg is totally broken right now because that pool is so unbalanced. And so, even though they claim there's this arbitrage mechanism that's supposed to help bring it back to peg, the protocol, with its current set of limits, cannot mint enough Luna to even rebalance that pool to bring it back to peg on chain. And that's not even talking about the much larger sources of liquidity off chain. So,
Um,
yeah, it's bad.
yeah, that's a lot. Yeah, that's a lot. And this we haven't even mentioned one of the more insulting things I think that was discovered today by a couple fantastic CoinDesk reporters. I believe it was Sam Kessler and Danny Nelson. I hope I'm getting that right. And if so, congratulations, fellas. You did a really nice job. There is a CoinDesk article that was released today that basically there it is that says Do Kwon did there it is. He did a different stablecoin previously based on another stablecoin that we've mentioned in other episodes called Basis, which when we did our episode with David Canellis, who works over at Blockworks now, shout out to David, we were talking to him about BitClout and Nadir, who did Basis. Basis was just a really bad idea. Can you go over Basis before we talk about Basis Cash?
It kinda. It was another multi-token algorithmic stablecoin that was it was supposed to keep a token pegged to $1. This one involving like a system of bonds and other stuff like that. It was started up, as you mentioned, by Nader, the same gentleman behind BitClout, and then he shut it down because it was pretty clearly an unregistered security. And yeah, and so after he shut it down, we just found out, thanks to this CoinDesk reporting, that apparently in 2020, after Terraform Labs had been started, after the Terra ICO, while Do Kwon was supposed to be working on that, he decided to adopt the pseudonym of Ricky Sanchez and go fork Basis, which had failed and been shut down, to start up Basis Cash, which then failed and was shut down. And that's it. He while he was making one algorithmic stablecoin, which is currently failing, he had to take a break and go make another algorithmic stablecoin, which failed.
Yeah, but it's okay. So the reason I think it was really good. First of all, great timing by them. Second of all, I think what it portrays really well is what we saw yesterday from the there's a project, I think it's called the Zuki NFT project. I know so little about the NFT space that I couldn't tell you if I'm getting that right, but whatever, some NFT project, and the guy in charge of it had done a bunch of other, projects previously, NFT projects previously, and abandoned them and walked away with money, right? And then after doing a horrendous space on Twitter, he put out a big long apology, saying like, I learned so much from this experience, which seems to be this really like intense running narrative for all of these people, and I'm really tired of it. Is this idea of like, well, I built let's say a Ponzi scheme, a scam, a fraud. I built something to steal people's money. Look, it's a learning process. I didn't do it. I didn't set out to do that. So don't get mad at me for that. And it's like it's a broader issue in the entire space. It's something that we're testing in production, man. It's all an experiment, dude. Can't be a security if it's an experiment. Can't be fraud if it's just an experiment. We warned you. Don't put your money into it. We basically said that with a wink and a nod. So I'm getting incredibly tired of it, and it's something that is clear, right? And I think the first moment that maybe people started to come to this realization was, again, thanks to Zach XBT on Twitter, if you want to follow him, was when he exposed Sifu, which is another thing related to all of this, that in a sense related to all of this, that is like, oh, there's like this back network of untrustworthy people who have been running scam after scam after scam after scam and not getting caught.
Yeah, there is. And we talked about it a little bit on the episode about Michael Petrin, Omar Dahani, and Sifu, who are all the same person, just to be clear for any new viewers. Those three people are one people. Is that what they were doing was effectively rehypothecating through the leverage provided by Terra in the Anchor lending protocol using their degen box. And so they were effectively taking money out of Terraform Labs' pocket and putting it in the pockets of people using the degen box. And the really strange thing while this was all occurring is that every single time Do Kwon would come on Twitter and get excited about it when they would open up like a new set of liquidity and stuff. And I think the reason he was okay with all these funds being drained out and all this is because it gave them this opportunity to really accelerate the growth of the Terra system and make it look so much larger, because there were all these people interested in getting that subsidized yield, in taking that money from Terraform Labs for themselves through Anchor. And so Do Kwon cared way more about number go up than making this at all sustainable, and so he was totally willing to do that. Plus, as an aside, it really broadened the amount of UST Terra liquidity on Ethereum, and potentially could have allowed large entities to reduce their UST exposure if for some reason they had a bunch of it. And you could see a lot of wallets doing that during this, UST being bridged over from the Terra chain to Ethereum, and then going into Curve or these other pools that were in part created to provide these pairs against magic internet money or anything like that. And so because of that, it is plausible that some large entity with a bunch of Terra on Terra chain was using this as an opportunity to sell for other stablecoins. It is not yet 100% clear who that entity might be, but there are reasons Do Kwon might have been encouraging this unsustainable growth.
Right. Okay. So, I don't know how many more updates there are. If you want to mention anything else, feel free.
Yeah, mostly I, like you, am really frustrated, tired, and done with this is all just an experiment thing. No one told you to invest in this, no one told you whatever. Because, one, often it's not true. Even if, like, the big faces, the big names aren't outright telling you to go invest, there'll be tons of other members of the community who will gladly go on Twitter and tell people they should be buying a certain thing, right? And then just because, like all algorithmic stablecoins, this was pretty clearly unlikely to last forever. This was not really a sustainable thing, and they recognize that. And if you talk to a lot of people in the Luna community, they would tell you, even leading up to this point, that many of the things they were doing were unsustainable. And so it really just felt the entire time like it was a few large firms, many of whom bought in at the ICO prices of like 18 cents or 80 cents, really just trying desperately to accelerate this growth so that they would have the liquidity to exit those positions. And in doing so, there was often some of these minor deceits, like you can always make this swap, which was just a lie told by people who either didn't understand the protocol or wanted to deceive people, or it was just, it seems so doomed to failure that I'm tired of the people who do things that are doomed to failure, that hurt people, that leave people destitute, getting to say, hey, it was our bad. We tried hard. Because it's just fucking bullshit.
Yeah, I think something that I had mentioned the other day was that that not enough people were asking why. Like, I get it. Oh, it's a marketing ploy or whatever. Like, there's the simple, like, oh, just because, right? Okay, fine, whatever. But the bigger question, why? Why would anyone in their right mind offer 20% yields on a stablecoin? And it's so funny because I too, as a critic, as a skeptic, like I've been so caught up in the bull run essentially that I didn't care. I didn't bother with that question. It was like, well, it's an algorithmic stablecoin. It's doomed to fail. I don't care. That was my entire takeaway. And I think it's unfortunate because this was such a red flag of an illness in the system, right? This idea of like, well, the way to get our stablecoin adopted is to offer something totally fucking insane. That's a really unfortunate solution to to a real problem because you can't just pop up do a stablecoin that's just like Tether or just like USDC or just like what you name it, because there's nothing different about that, and there's not enough money sloshing around for the same exact ideas. So if you're offering something unsustainable and crazy, that is a sign that the system has much bigger issues than simply one stablecoin. And the fact that $18 billion in that was in that stablecoin is it's. I think that's what people were like. Why were you so mad in the last episode? And I'm like, that's why, because it feels like people dumped $18 billion into an obvious Ponzi scheme, and it's unfortunate. It's really unfortunate that that's what happened. But what else can you say about that? I think there's at least one question. So I think you should address that, Bennett. It is, can you go deeper into how Terra is buying liquidation from nodes
Oh yeah.
who use other oracles and vote out? So it's talking about the oracle discussion that we had in the last episode.
Yeah, so there's a couple different pieces to this, Elton. The first part is that you get the majority of your staking rewards on the Terra chain by participating in the oracle voting process. If you fail to participate in the oracle voting process, you effectively don't get your share of the rewards, which are coming from the gas fees paid to actually interact with the smart contracts on Terra, and the swap fees for going through the market module. When you are not participating in the oracle process, you lose those. If you participate and vote with a number that is away from the mean, you end up getting kicked out of consensus. And so besides not getting your rewards, you're also no longer participating in the process of proposing and validating blocks. And another validator down the list gets brought in. Why this matters is because Terraform Labs has provided this Oracle price feeder to this large number of validators. The vast majority run it. And so the issue is, if there's any issues with that price feeder, which there have been in the past, then the people who are using different software that lacks that problem, whatever the Oracle price feeder from Terraform Labs is encountering, will end up voting out of band, even if their number is more realistic, right? More connected to reality. And so because of that, we'll end up getting kicked from consensus. Now, the other part goes back to the Anchor protocol and the liquidations and front running. So in December of 2021, there were erroneous numbers that came out of the Oracle price feeder provided by... There were erroneous numbers. So this is actually a little bit more complex. Anchor was using a separate Oracle system from the base chain Oracle system and was basically pulling in the price feed directly from Terraform Labs. The Terraform Labs feed that was being fed directly into the Anchor protocol had some wrong numbers on it, which resulted in some erroneous liquidations. Do Kwon had told the infrastructure team at Terraform Labs that they should be actively bidding on liquidations at Anchor to maximize their share of the liquidations. That's the phrase he used, that Terraform Labs should maximize their share of liquidations. Because Anchor was using the price feed provided by Terraform Labs' team, who was bidding on the liquidations, saw the numbers before the liquidations actually started happening, before they actually hit the chain and affected Anchor protocol. Because of this, Terraform Labs' bots were aggressively bidding and buying up liquidations as these erroneous liquidations happened. And so the practical effect of that is Terraform Labs caused a bunch of people to be liquidated, bought up their liquidated collateral, and it was all because of issues with this price feed that they had developed. It was basically them front running in this decentralized system.
Okay, cool. The last couple things I think we need to touch on really quick, just because they're in a part of the discussion at large. A lot of people are talking about Tether breaking pig. Indeed, right now, CoinGecko, which is an aggregator and generally shouldn't be relied on, like no aggregator should be relied on. I think that is something that people should get used to. It's better if you have the time and the energy to be checking numerous exchanges at once. Like check what it's trading at Binance, check what it's trading at Bitfinex, check what it's trading on Coinbase. But anyway, I'm looking at an aggregator right now. I'm doing exactly the opposite of what I'm preaching. And it does say that Tether is currently trading at 99 cents, which is 1% off of its peg. We have seen Tether breaks before. I'm not concerned. I guess as a critic and a skeptic, people will probably be surprised by that. But we've been doing this for 4 or 5 years now. Sorry, it's nothing new. And 1% is not scary to me. I think you should tell me about it and get worried if it's off 5% or something, 3-5%. Then you can start getting worried. We actually saw that with Terra as well. Like it seemed it was kind of bouncing around a dollar to 98 cents, kind of just going bouncing around there for a while, and then at some point it dumped down to 97, and then it dumped way harder after that. So there's these weird spots in the market where people are building sell walls and buy walls and all of that. But I believe you are with me that this is not a concern we have right now. The collapse of Terra doesn't seem to be directly affecting Tether.
Yeah, I think at the very least we have insufficient evidence at this point that it is, right? Like, though I am looking right now and it's down to 98.9, which is more than 1% off, which is generally when I start to get a little nervous. But yeah, like we're saying, it's not the largest peg break we've seen. We saw 10% peg breaks in 2019. We saw 7% peg breaks in 2018. And so 1% isn't something I'm terrified about, but I think that it is a good moment to remember that, like, we saw some of the collateral damage caused by the collapse of Luna and Terra, right? And how that's affected a bunch of other protocols and a bunch of other things and kind of been depressing the entire crypto market for the last several days. And Terra is like 1/4 to 1/5 the size of Tether and is not commonly used as like a base source of liquidity for like trading pairs and isn't integrated at basically every single exchange. And so I think it's a good opportunity for us all to remind ourselves that when stablecoins depeg, they generally have collateral damage because stablecoins are like meant to act as like this base unit of account in cryptocurrency and in decentralized finance. And due to the kind of composable modular nature, that means stablecoins get built into a lot of different things. And if the assumptions in those things are wrong or not careful, those things end up broken as well with the stablecoin.
And to be clear, the worries and issues that Tether has to be concerned about, or the executives at Tether, the users of Tether, have to be concerned about, are not the same as Terra. Like what occurred with Terra and Luna was they called it a coordinated attack. It simply means that their tokenomics were broken and someone took advantage of that. And it was probably someone with a nice, huge lump sum of money to start with and an even bigger lump sum of money at the end of all of this, if indeed the network was attacked. If that's indeed what happened and it wasn't just simply a run, then Tether would be worried about much different issues than that kind of attack. So because it's not an algorithmic stablecoin, it is backed by a host of different assets. We're not going to get into that right now. But
go to our old episodes if you care.
Yeah, it's a long story. Anyway, that's the one of the last things I want to discuss. I think the other thing is just another point of reflection for this contagion is Coinbase has been absolutely shitting the bed. Listed publicly under Coin, it's trading, I don't know, at like $50 or something right now. I don't know what it's trading at, something crazy. It was trading, I think its top price was $430, something like that. So huge fall from grace, one of the worst performing companies in NASDAQ, and NASDAQ has been plummeting itself. So I think that's something to be wary of. We also had Brian Armstrong do an incredibly weird tweet thread that started out because there was speculation about this new disclosure that they were forced to put in, and I fully believe this explanation. I'm not suggesting this explanation is not true. I'm actually sure it is. The SEC told them you have to put in this new risk disclosure to your investors in case there's some sort of bankruptcy for your company. I think this is something that a bunch of other companies that did either direct listings or SPACs or something were required to do as well. But he then proceeded in the very next tweet, after saying that we were forced to do this new risk disclosure, said, "There is no risk of bankruptcy. There's always risk of bankruptcy." Yeah. I am
Coinbase
disappointed
bankrupts.
as usual with Mr. Brian.
Yeah, though I do prefer him writing weird threads to writing weird letters to his so-called friends. And so, yeah, I did not expect Coinbase to be a company that would go bankrupt anytime soon. Their expenses seem a little high when I look at their financials, but they charge a ton of fees and have a lot of volume, so they've got money pouring in. Until I saw Brian say that, and then I'm like, oh, well, that's... Now I'm curious, Brian.
Okay, so I think that pretty much does it. Hopefully that, I don't know if people had more questions or they were just wondering what was going on. Hopefully that answers some of those questions. If there are any other questions, I don't know, maybe people could get them in really fast. If there aren't, that's cool. We can just get out of here without having to answer more than one question, which I'm more than happy about. So whatever you want to do, Bennett, I'm happy with.
Thank you all for joining us. Hopefully this will be hopefully this is the real last time we have to do an episode on Terra Luna. Unless something wild happens, it'd just be repeating more of the same stuff at this point, y'all. And so hopefully this is the end. We don't have to talk about it anymore, and we get to talk about much more interesting things.
Yeah.
Thank you all for joining us.
Yeah, stay skeptical, everybody.